What's up, everybody? Happy Monday. Hope everyone had a great weekend. And this is a new word. This is a new word that you're all going to hear everywhere. Get to know it. Stagflation. I've been talking about this for years. I knew this was coming, and it's very simple. It means the cost of money is going to stay or get more expensive, but everyone is making less money, and things are getting more expensive. So you have an inverse reaction, inverse relationship between the cost of goods and how much money's being brought in. So this hasn't happened since 1970, and we're in it right now, which for people in the real estate industry is not the worst thing in the world because that could be the catalyst that forces major unemployment, which I sound horrible saying, but that's what the feds want. They want unemployment up to 5% for them to say, okay, we're going to lower interest rates. And so you're starting to see some major companies have massive layoffs. And so as that continues to go, especially if the stock market starts to tumble like it did last week, if you continue in this path where the stock market goes down and the cost of goods goes up, you are in real stagflation. People start to lose money, and the Feds are going to be forced to try to prop up the economy. So you also have um, the Feds announcing today that they're going to increase the overall budget, so we're going to be able to print more money basically to add on more debt to the balance sheet. Crazy, 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 crazy. If this was a like if the Feds were CEOs or whoever runs the government or like CEOs, CFOs, and CMOs, they'd all be fired. The stock the stockholders would have already kicked them out. But it is what it is. All right, guys, this is where people want to see. They want to see rates. I like to use Mortgage News Daily to see where my competition's at, and then I'll show you where I'm at. You're looking at conventional sitting about mid sevens, FHA, VA sitting almost at sevens, right? Six nines, jumbos, higher sevens. And here's my prediction for the week. I'm going to start floating. You had two good back-to-back days. You'll have a third back-to-back day probably, or tomorrow you actually, just based on this trend, tomorrow you'll have a dip, and then hopefully you have upward trajectory over the next 2 days. And so I would bet dip right here, and then I would bet positive reaction. If you have a positive reaction tomorrow and you see the candlestick up here, meaning rates improve by 20, 30 basis points, I consider locking once you get closer to this 25-day moving average. As you're approaching here, like there starts to get a ton of resistance, and so I would lock anywhere right here. Yeah, and I'm a mortgage broker, so my rates tend to be a little bit better than most. And so here's my rates for the week. This is where I started off my days. Conventional 740, 5% down was sitting at about 7.5. These are no points, so I don't quote with points. FHA and VA we're sitting at 6.75. Mobile home in park, we closed on Friday. That one got about a 9% rate. Hard money sitting still at 10 to 12. That's probably where it's going to stay. HELOC sitting 10, 11. I closing one this week at 12.5%, but the credit card debt is almost 30%. So they're saving 20% on their credit card debt. Stated income, my favorite loan ever, 7.625, which is phenomenal. I mean, it's absolutely great. Land loan sent 11 to 13, and ITIN sent 9 to 11. Yeah, I mean, there's still a ton of people buying, so let's try to figure it out. And if you're one of my partners, let's jump on a call this week and start to strategize for how we can really dominate in this marketplace. We have about 6 million in escrow right now, like live under contract and counting. So hopefully we get to 10 by the end of the week, and then we'll see. I mean, that's most people's year. So there's still business out there to be had. Let's go after it. Talk to you guys next week.